This is our Forex blog for December 7th, 2012. And the first step of our easy three-step Forex trading system is to use our currency meter, which statistically compares every currency to every other one. I'm scrolling back to start the day off at midnight. Typically midnight to 12 is the most active time. And this build your own trend currency meter works live, and it's got a bunch of different tools. Some of them measure the percentage of currencies going up or down based on different statistical models we have. Other ones, such as the range ADX, regular ADX, Momentum Pro, measure the intensity of the trend. And you can see this new one has the daily, weekly, monthly trend, which gives those longer time frame trends about a third of the weighting, 4% for the monthly, 13% for weekly, 18% for daily, and 2/3 of this reading is the real-time momentum. So basically, in a nutshell, you want to buy the strong ones versus the weak and sell the weak versus the strong. The euro was starting today off weak again, just like yesterday. And earlier in the day, the yen was stronger than the dollar, clearly. It's very easy to see, and it's very easy to read this because it factors in all the time frames and all the different trends and directional trends and intensity, statistical intensity trends. The New Zealand was one of the stronger ones today, and so basically you could have focused on selling the Euro New Zealand. So let's bring up the Euro New Zealand chart. We'll scroll back to starting the day off, and you can see down, sideways, down, pullback trade, down, pullback trade, down. You know, basically you're focusing on selling this and you made money every time. Now, obviously that doesn't happen every day in every single instance, but when a currency is super weak, like the euro was yesterday and today, and New Zealand was strong both days, you can see just down straight constantly. Now, since I have this up here, notice this is our old fib tool. We're releasing a new version today, which has a brand new fib tool, which has all the old functionality, in addition to 2 more Fibonacci retracement levels and 1 additional Fibonacci profit target. Let me bring this up and showcase why I created it. I'm trading a lot more now than I have in the past. And one of the things I noticed is super strong or super weak currencies do not pull back the 38%, which you normally look for. So when you hit Control F to bring the fib tool on here, and you draw it on the chart from the high to the low here, you'll see there's a new area, which is I think 23.6. Let me check. Yes, that's correct. It's 23.6% level. I also show the 1.27 Fibonacci area. A lot of times profits don't go quite to the 1.382. They come a few pips away from it, so now you'll be able to see that as well. And this upper level is the 78.6% retracement, which, by the way, came into perfect play today in the euro dollar. From the high here to the low, notice the 78.6% level pretty much tagged to the pip. And so these tools are designed to be used in a couple different ways. On very strong trend days, for instance like yesterday, markets do not retrace to the 38% level most of the time, but they do retrace to the 23.6 level, which is this right here. So when you see a currency like yesterday fall off a cliff like this, and this was a very rapid decline. If you watched it live, it just kept going down, and here's the first time where it actually stalled. Once it made a slightly lower low here, you redraw it. This level right here, notice price never really went above it, and this happens all the time. And I've decided, you know, for my own trading, I want this level in our fib tool. And I also want to see this. If you make a big move in the market, a lot of times the market doesn't hit the 1.382. It comes close, but doesn't quite hit it. It tends to hit the 1.27 Fibonacci profit target level. And so I've put that on there. Again, this is the 1.27 fib target. This is the 23.6% retracement, and this is the 78.6% retracement from the top to the bottom. Again, these don't always come into play. There's certain times where you use them, and I'll showcase it today. Let's say the market was trending down earlier today, like we saw. The currency meter clearly showed that the euro was very weak today and the dollar was strong. Let's just put this back on the euro dollar here, and I'll just go over this real quick. Earlier in the day, the euro was weak again. So you draw your fibs off the first move here. And notice, oh, I'm sorry, this is the other software. Let me bring up the new one here. Here it is. So the euro started off the day, and guess what? It did not retrace to the 38% level. Again, if you had waited for a 38% retracement, you would have missed that move. But it did retrace to the 23.6, and it went slightly above it. So what I plan on using is the new Smart Trader windows, which look like this. I'm going to release these as well today. It has a little arrow that shows you what the current price is, and it lets you know the statistical levels of reversal. I'm going to go over that a little bit later in today's Forex blog. This new 23.6 fib area is a great place to look for retracements, especially if it happens to be maybe a 30-minute statistical high, which I'll add it to the chart here and we'll see. If you put the 30-minute statistical tools on here, it might happen to been close to that. In this case, it wasn't actually. The 30-minute statistical high was up here. A lot of times you'll see a pullback where it's very close to the 30-minute statistical high and near the 23.6 Fibonacci retracement level, you can find those trades. Now notice on the move down here, look where it went, right to the 1.27 fib target, which happens all the time. Now it eventually did go lower, but I'd much rather, if I was trading this, get short, get out with my target, maybe get short again. If a double bottom here, get out, wait for a pullback, get short, get out. You got 1, 2, 3 trades there, all wins, and you're in and out, in and out, in and out. That fits my style, and that's one of the reasons why I put this on here. Notice this move up from here to here. Not even close to coming down to the 38% retracement level, but guess where it did go? To the 23.6. So again, if you see a little spike up and you want to catch the pullback, what is a safe place to buy the pullback? It's right here, the 23.6. Now this only happens when the markets are temporarily very strong or very weak. They're not going to retrace to the 38%. You can get into a trade here. Let's just say you normally trade 5 full standard lots, and you really want to get in here and maybe scale a little bit more here. If you normally in the past got in 2 lots here and added 3 more lots here, which progressively moves your average price down, expecting to move back into that direction. Now you can get in maybe 1.5, 2 lots here, 2 lots here, 2 lots here, and for these little tiny pullbacks like this, you got a 2-lot trade, it goes up 20 pips, you made $400, whereas before you would totally miss that trade. And so that's the reason for this the 23.6. The 78.6 fib level, again, markets that are very weak, like yesterday, today, the euro dollar, they are not going to typically go back up to the previous highs, but they will oftentimes go past the 76% fib level, or I'm sorry, the 61.8% fib level, and guess where they stop at? The 78.6 to the pip. And so this makes an excellent profit target. If you were trading this little pullback right here, you already have your likely max high of the day right here at the 78.6 fib. You're out. So you got in here, you got out, you timed it perfectly. Now these, the new Fibonacci tool, I haven't changed it in about 8 years. So this is very significant levels that I've kind of watched over the years, always wanted to have it in the software, and finally decided today to put it in there because I missed too many good high probability trades, waiting for deeper pullbacks, safer pullbacks, and really the reason that I am now looking to sell those much shallower pullbacks is because of the new Smart Trader window, which we're going to be releasing today too. I know when a currency is super weak like the euro, where all the levels are and where I can kind of scale into a bigger position if it goes a little bit against me. Typically what happens when you're trading with the trend, short little counter trend moves will spike up. A lot of times you're too soon you get stopped out with a loss, and then when you're out of the position, it goes your way, and you miss a 20, 30 pip amazing trade. And so I've found that I can scale into these trades with much higher probability, and I get in small at first, so there's no stress. If it goes 5 to 15 pips against me, I know where my next entry level is. I want it to go against me so I can put in a big position. But a lot of times these statistical levels are such high probability that the market goes your way immediately. At least I'm in these trades now that I had missed for years and has always annoyed me, and it's very annoying to miss 15 to 30 pip move because you're waiting for a safer, higher probability entry. The market doesn't always give you those. So now you're going to always be able to get into those trades. I suggest doing it in a very light way, but it should very much help you catch trades you never caught before. So let's go over and how to use these and some of the other trades today. So obviously the yen was very strong, as was the dollar. Let's take a look at the euro yen, and we'll show how to use the new fib tool in finding this. All right, so earlier in the day, the market dropped off here and pulled back. If you take the high to the low right here, guess what? Didn't come close, again, to hitting the 38% retracement, which is the minimum I've always waited for in the past. Now, you see this level right here, 106.62. Never really went more than a pip or two against you. You're short, obviously with a smaller position, because you have many choices. You can take these trades, get out with a small loss, get back in again with a bigger position at the 38 or 50% level, or you can get in with your idea of getting in lightly, scaling in heavier at the prices you much prefer to have a position in. And that's how I plan on trading, just because it's easier than getting in and out, in and out. Just get in, set your alert at the next price. I always, when I get into a trade, I set my alert for the next scale in entry, create alert, and also my target, which I always have on the server. I also have my stops on the server just in case I'm not there, I don't get killed. But nonetheless, if I would have put this trade on, my next scale in entry never would have got hit. I would have been notified right here at the fib target. In fact, now with a new 1.27, I'm going to put it right here. I would be notified by my cell phone. 4 seconds later, I come back, I watch this, and it's still falling. Here's a 1.618, which usually is the max profit. You're out. So in this case, I would have gotten short at 106.61, out at 23 for almost a 40 pip move. Obviously on a much smaller position than I'd like, because you can't go full in at this level. It's not deep enough to really go trade super large. But now on these super strong or super weak ones, using our currency meter, you can get into very high probability trades with very minimal risk, because you're going to trade smaller lots at these 23.6% retracement. Now, what if you decide when the market double bottoms right here and it makes a slightly lower low that you want to buy the bottom right here, especially when it comes down, up, down, doesn't break this low? Well, guess what? Now you can use the new 78.6 level as your profit target. This is oftentimes where the market's going to stall. Actually, I would draw this from here. This is really where the beginning of this move happened. Notice where it went to. 106.80, pretty much right where the 78.6 fib retracement is. And so in this case, where it shot up above here, this is not likely to go above this area. And you can also sell this area up here as well, because the trend is clearly down. You bottom fish down here, it popped up, and you're out at a very high probability, likely max high of the day. This is especially when it confirms that it's not able to go above this level. You can really safely right here go short for another pullback. Now, if you did go short right there, a lot of times the 50 or 62% is likely the maximum profit. You're short at 80, you're out around 37 for another 40 pip profit in the direction of the trend. So, what's new in the new version 4.303? One, if you click on the load button and you go to chart examples, this is where we put all of our sample workspaces. a new one in there. It's called Forex Smart Trader. When you bring this up, it's going to show you this new window, which lets you see a bunch of different, let's hit the plus and minus key. It's going to show you a bunch of different statistical areas. The 4-hour statistical high and low, 60-minute statistical high and low, along with a 1 standard deviation for each of those. The previous days high and low, previous weeks high and low, previous months high and low. You can also right-click on these if you would want to put your value areas for the previous day and week in there. Click on FX value areas, and you can then add those levels to here so you can see where they are in relation to everything else. And you can right-click on this and change the areas that get shown up. Statistical bars back. This is how wide the bars go across the screen. 40 bars, 25, 15, and 0. This lets you see the 4-hour statistical high and low and 1 standard deviation high and low, the 60-minute, the 30-minute, and 15-minute. Now the 15-minute you might not use for Forex that much, but it is used in stocks and futures, so I put that in there for me. Anything that you don't want to see, set it to 0 and it will not show up. So if I don't, as you can see on here, the 60-minute high, 60-minute 1 standard deviation high show up here. If I change this to 0, and also this one to 0, the 30-minute and the 60-minute will not show up. See, the 60 minutes gone. Will not show up. If you don't want to see one of those levels and you only want to see the 4-hour statistical high and low, if it fits your style, you can remove it. Now, if you want to add it back, you just put 25 there. Make sure there's a slash between each level, not at the end. And now the hourly goes back, as you can see. And again, the current price is with an arrow. It's very easy to see. And this scales. It's every time there's a new 4-hour bar, the 1 standard deviation 4-hour high and 1 standard deviation 4-hour low are really the likely highest and lowest that this particular currency will go over the next 4 hours. So over the next 4 hours, you know that 29.55 is likely to be the highest high, and 28.97 is very likely to be the lowest low. And so you can see prices in the middle, which oftentimes is the case. During a super strong or weak market, the market can kind of be, 1/3 towards the top or 2/3, of the chart towards the bottom. And you know where all your statistical levels are. And you can also add, if you prefer, pivot areas, daily, weekly, and monthly pivots. I did not include these in the sample chart. I'm going to let people decide whether to use them or not. I would not label the prices. I had this on another chart. Let's go to the pound dollar. And you can see all the levels. Now this is obviously a weekly pivot level or something like that. By not labeling it, you don't see what it is, but you can put different widths on the chart to know what they are, and to try to keep it less cluttered. The reason for this is because you have all the key likely reversal areas on a very tiny smart window, you can keep your regular charts much cleaner. So here's the euro dollar. If you had the 30-minute statistical high and low on here, the hourly statistical high and low, the 4 hours, it would become unreadable. Let me just show you this. But not knowing where these levels are can really make you miss very profitable trades. Already just with the 30-minute on here, the orange and blue, you can see it becomes busy. Put the 60 on there, 240, and you can see there's no way you can have all this stuff on your chart and read it. It's off the charts too cluttered. Now, maybe you don't want your value areas to show up on your chart either. That's fine. Put them over here on your smart window. You can put it right beside your regular window. Oops. Let me get rid of that other window there. Hold on a second. So now you can see all the levels that you need to know about the euro dollar. Price is 29.24. Now, whether this is up or down is based on the time frame. If the 5-minute bar is above the previous 5-minute bar's close, it's going to be green. This one's a 5-hour chart. If you want to put this on an hourly chart, it doesn't matter other than the color of the current price. If you want to know if the hourly chart is going up, you can just put it on a 60. You're not going to see the bars. You're just going to know whether the current hour's trend is up or down. Now, if you want to have these scroll over to the left, you can hit the plus key, make it, fit in there however you want. You can resize it. The smaller the better. It's designed to let you know where the current prices are. And one of the things I love about this is because when you're in a trade, especially a heavy big lot trade, in prices going up or down $100 to $200 a pip, you're going to get nervous by watching the chart. But by watching this, I feel the anxiety of trading is probably 90% less for me. And I hope that you find that to be the case for you too. You're in this trade, you know where your next scaling level is. The trade either goes your way or it doesn't. You can check out our Facebook page. The other day when I was trading live, I posted one of my trades in the room right as I took it, and it hit my target just like I predicted. And you will see over time how this works in live trading. We do plan on creating a new live trading room where I can help traders get started in learning how to trade, and you will find that this tool works. It's one of the reasons I created it for my own trading, but I think that you will find it equally as amazing as I do.